Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, October 8th, 2009. Well, folks, as you're viewing your SPY chart in front of you here, this is again the 10-minute intraday chart of the SPY, mirroring the S&P 500 very, very accurately. And what you're seeing here, folks, is the markets are trading to the upside today, although there are some interesting things going on that we need to be aware of and discuss. Now, there's two ways of viewing why the market is up today. One is from the media's perspective. And if you listen to the media, you'll hear, well, Alcoa's earnings were good. And in all fairness, they were good, although I kind of take a little, kind of pause to what the earnings were, and for a couple reasons. The number one reason, because a lot of the positive earnings announcements that came out from them was based on cost cutting. And again, we saw that last quarter. You're starting to see that same thing again, and that's helping these companies beat earnings. So again, you have to take it with a grain of salt, but nonetheless, they were solid earnings across the board. Alcoa was trading as high as $15.11 all the way up here today. Since then, it's come down to be up around $14.60, so it's actually dropped over 50 cents from the highs. But that's just one of the storylines the media is going to harp on. The other one is going to be jobless claims. Jobless claims, again, coming out in a little better than expected. They expected around 540,000 initial claims to be filed, and instead it was about 520,000, so beating by about 20,000 from what the expectations had been, and that gave a little bit of a positive bias. But to be honest, that's just what the media will tell you, and you have to take it with a grain of salt. I will tell you exactly what the cause today is, and this is it right here. Take a look at this, folks. This is the dollar chart. The dollar chart has continued to get roasted day after day after day after day after day, and the market obviously goes up when the dollar goes down. We've proven this time and time again in these free videos. I've proven it to my premium subscribers left and right. They all know it now. And basically, when you see the dollar coming down, it's going to give the markets a bid. Now, you might say, well, why is that? For those of you that are new, maybe watching these videos for the first time. Well, simply put, folks, the market is driven by the inverse of the dollar. So the dollar moves down. What happens? A dropping dollar causes a spike up in commodity prices. Commodity prices like oil go up. What happens to oil stocks like ExxonMobil that are a major portion of the overall S&P 500? As much as 20% are energy companies in that S&P. So you have to look at it like that. So a decline in the dollar is a very, very bullish thing for the overall markets, and you continue to see the dollar getting roasted, absolutely demolished today, folks. Now, the interesting thing about this, look at this. Every move today has had the opposite move on the market. So, for instance, here's the UUP. That's what you're looking at right now. This is the intraday 10 minutes, so it matches up perfectly with the SPY, which I'm going to show you in a minute. And I just want to go over what you see here. Initially, we saw a little bit of a gap down in the markets. What happened to the markets this morning? They gapped up, right? So the market's gapped up. Why? Because the dollar gapped down. You had a nice solid move to the upside on the dollar initially. What happened to the SPY? Let's go back to the SPY chart. Look at that. Initially, the market sold off. See those big red candles? That's exactly what went on. Then all of a sudden, out of the blue, you see the dollar get tanked, absolutely demolished. Look at the markets. They go down all the way right around to this 12 o'clock, 12:30 time frame, and let's take a look. So you have a drop in the dollar. That means you should have a pretty nice push up in the markets. What happens on the spiders? Oh, look at that. The markets do rally all the way up. So again, you can see the correlation here, and you have to understand this correlation because it's really the correlation that's going to dictate where this market goes up into a certain point, and I'll discuss that soon. Now the interesting thing that's going on is all of a sudden, look at this, the market started to fall. Well, does that mean that maybe Alcoa's earnings weren't as good as people thought? Does that mean that maybe jobless claims weren't as good as the media is portraying them as? No, it doesn't mean anything like that. What it's telling you, as soon as you see the market starting to fall, take a look at the UUP. Let me punch up that chart. Oh, well, look at that. The dollar's starting to make a move up. So again, it's weird. I mean, this is a very interesting time in this market, guys. Again, you won't see this type. We've said this since 2007. You won't see this market again in your lifetime once it's over, which again can take many, many years. But again, for literally a decade to even a century, 80. You could talk about cycles, 80-year cycle, whatever you want to talk about. If you're going back all the way to the cycle based in the 1930s on the Great Depression. But in any case, that's the craziness of what's going on here in the market. Look at the dollar as the dollar inches up. The market's coming in here pretty nicely. That's not a bad fall now. I mean, look at this market really coming in pretty nicely now, and that is a nice fall. Now, again, those of you in the chat room obviously know I picked up some ETFs on the short side right up here at the highs today. We are on the money on those. I haven't unloaded them yet. I may do that by the end of the day based on where this market comes down to. But again, those of you guys in the research center tonight, I'll give you all my entries and exits and everything, so you guys are fully appraised of that. That's for premium subscribers only, though, so be aware of that. But nonetheless, a nice little dip here in the markets. The markets are still up very nicely. Don't get me wrong. The Dow is still up about 80 points or so, but they have come in now very nice. In fact, the Dow is now up only 77 points, coming very, very nicely in. Nasdaq's up about 20, and S&P's up about 8.5. So you're up less than 1%, about 0.8% across the board on the Dow, Nasdaq, and S&P. Now, the levels you really want to know about, guys. I mean, that's the big question, right? Where are we going? Are we going to start to make a move up? Are we going to start to make a move down? Are the markets going to break out to the $7.60, 107.65 level on the SPY, 108 double top, or are we going to start to fall back down towards the master level? Because that's ultimately what happened here, guys. I need you to understand that the master level was hit last Friday on the gap down. We called that out and made that great call about the master level getting hit. That's where I unloaded a majority of my short opportunities, pocketed a lot of profits right there, and then have slowly been, doing some odds and ends, scalping here and there on some short side, on pullbacks, on bounces, and so forth off master levels in the chat room. Research Center guys obviously know the master levels as well, but the 102 level was the spot there, and since that 102 level, you went up 5 points. 5 points, folks. We're talking about almost a total of probably about a total of 5% bounce in the market since last Friday. That's an amazing bounce, folks. No other way to cut that. That is an unbelievable bounce. Now, what you want to know here is, well, we're coming down pretty nicely. Where are you going to have support? And I'm going to tell you exactly where you're going to have support now on this market. What I want you to do is take this line right here, draw it right across. See how you went sideways right here before you broke out, and then you had the high closing points? There's going to be a little bit of support right here. This should be a little bit of support. Good sell, though, on the markets here. Very, very nice sell. But again, realize this, a little bit of support right here. And then if you break that, you're going to go down to this green trend line. The green trend line will be next. That's at 106.43. So a first level right here is 106.65. That's what we just pierced and just hit right here. Watch for a little bit of a bounce there. We already are getting a bounce. Look at the bounce. I mean, it's uncanny, guys. If you can read charts, you can do anything. In the markets, you can become a Superman. Literally Superman, Superwoman, whatever you want to be called, that's what you can be. If you can read the charts, that's where you're going to get support. Now, if you break that level, if you close below it, you're heading down to this level at 106.43, 106.45. If you take that out, 50 moving average will be next. That 50 moving average currently sits at 106.15, along with this line. Dotted line is key. It's also mirroring the lows of the day. So the lows of the day, 106.15-ish, that's a big level right now. If we were to come all the way down in there, that would be a very sizable reversal for this market and would have to be respected very much so. All right? On the downside, past that, 105.95, and then down to this yellow trend line, which we could not break yesterday. You tried to break it. We talked about the tails here in the Research Center videos last night about how that was the indicator you're going to get a bounce into the close, how you caught above here, and this was the first time you confirmed a move above this green line. And remember, that's confirmation. Again, something that you really need to understand as a trader. It's very simple to understand, but you've got to get it explained to you to understand what does it mean when you confirm a move. How do you know when you confirm a move? This move here above the blue line, above the green line, this move, none of those confirmed. This move finally confirmed late in the day. What happens? The market rallies. So when you get a confirmation above the green line, tells you there's a breakout coming. Sure enough, bam, to the upside. You get a pullback up, 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 and now we're hitting this level on the downside. Pretty nice little pullback here on the spiders, and we'll continue to follow that into the close today. Now, on the upside, let's say we bounce off this blue line or we come down to the green line and bounce off of it. What happens? Well, 20 moving average is going to be resistance here on the upside. That currently is at 106.85. If you move up, the big level here is the white level. I just want to point something out. You have yet to confirm, and I want to make this clear, folks, you have yet to confirm a breakout above this line, and I want to express to you that why. Well, you got to close above here, next candle reversed. Here you got another close above the white line, and what happens? You reversed again, so you have yet to confirm a move above that line. Markets are continuing to sell off here now, and this is a very, very nice sell-off. Interestingly enough, let's touch back on the dollar. Oh, would you look at that? The UUP is breaking up even more. How do we know that the markets, again, guys, I don't even need to see the dollar chart. If the markets are moving one direction, the dollar's going in the opposite direction. It's as simple as that. Learn your stuff, guys. This is key. If you can know this stuff, you can trade it. Then just in the last week and a half, folks, I've taken $6 in profits on the calls to the chat room, to the Research Center off of FAZ. That's a minimum alone. Again, you want to know whether or not you're getting in good entries, bad entries, what's the key levels to watch for on the market, how do you know if the market's going to start to reverse and so forth. Look at the dollar break up here. That's a beautiful little push up in the dollar, and now you're seeing the markets come off of that very, very nicely, folks, on the SPY. Watch your levels, guys. Next level is going to be this right here. Now, you closed below this blue line. You didn't confirm it yet, though. Please be aware that you have yet to confirm this move. So, technically, you don't have a breakdown below that blue line. Now, if you come down to this green line, that can be a scalping opportunity to the long side. Also, if you come down to the 50, absolutely a scalping opportunity, especially with the double bottom right down here. So, watch that. You're now getting a little bit of a bounce. Now, what you want to see is, are you going to go back and retest this blue line like it's looking like? I know, do we close above to totally do an inverse candle bounce? And look at that move. Bam! Right back up. And that's the key, guys. Know your levels. Know that didn't confirm, therefore you don't jump short there, and look at the bounce back in the markets. Unbelievable activity here. Absolutely unreal, guys. I'm glad this is happening as we do this video so I can kind of teach it and show you how you have to know this kind of stuff. But in any case, enough said for the intraday video for you guys out there. Come join the research center. Come join the chat room. Join the webinar. Whatever you guys want to do. Just you want to learn this stuff. Price, pattern, and time will be your Bible. It'll be your holy book from now on when it comes to trading. All right, that's the bottom line. Have a wonderful evening. We'll talk to you soon. Take care.